I'm going to call out our panelists for the next session, Mr. Virender, Pankaj, CEO of Aseem Infrastructure Finance Limited. Welcome, sir. He comes over with 30 years of experience in the project, corporate and structured finance. In his previous assignment, he managed an asset book of 50,000 crores in areas of infrastructure, finance, structured corporate finance and supply chain finance. And also he has built a leadership position in green energy financing. Joining him is Mr. Vineet Mittal, the chairman of Avaada Group, conferred as the Solar Man of the Year. He is a social entrepreneur and a pioneer of clean energy in India. Ladies and gentlemen, can we have a round of applause for our panelists? Mr. Rohan Suryavanshi, Head Strategy and Planning, Dilip Buildcon Limited. At DBL, he's responsible for business strategy, financial planning, business process, streamlining, and investor management. Our next panelist, Mr. Pritesh Vinay, Director, Finance, JSW Energy Limited. He has 21 years of experience across corporate finance, fundraising, investor relations, equity research, having worked with reputed Indian and multinational corporations. Our next panelist, Mr. G.R.K. Babu, CFO, GMR Airports Limited. He has 33 years of rich experience in fundraising, tax compliance, accounts, and treasury fund management. Tamal ji, over to you.
I promise that this is my last session. Okay? I mean, too much of suffering for you. You have seen the context setting by Robbie. He took it to a different pitch. We didn't discuss much about business and what are the, but it was something very different. Probably that's the way the context needs to be set. And now we'll get into the nitty-gritty, the nuts and bolts of business. Okay. We have infrastructure financing of India, and it says coming of age. So essentially, there's no interrogation. So I think it's a statement that we are there into full swing. Probably you may differ, or I may differ, I don't know. So we'll hear. And like in the past few panels, I did ask the audience to participate. So here also we'll do the same thing. It's now 5:22, 23. We'll end at 6:15 because we are running late. But 6:15 sharp we'll close, and in between we'll have a few questions after the first round. Well, what would I say? JSW Energy sitting extreme left, Pritesh, right? Maybe we'll start with you. Not because you're bald, but okay, that's a way of, bald people are perceived to be the wisest, so that's there. Essentially, in the context setting, what I discuss is that infrastructure is something which we are banking on for India to call it 5 trillion economy, call it what Financial Times said, that third largest economy, whatever it is, taking it there. And that efforts have been on, but there are a lot of obstacles, particularly on the financing part. And as I said, DFIs were there; they did not serve the purpose. So asset liability mismatches led to their death. Then we have banking. RBI was restricting their exposure. Later, they can go whole hog, they can go for syndicated lending, etc. Then parallelly, we have corporate bond market, but that's not being developed. There is not much of depth as yet, as we focused. R.H. Patil committee many years back suggested many things, but not there, not happening exactly. And then, of course, we discussed, we had the takeout financing, which never taken off for reasons different. We just discussed about REIT and InvITs. So efforts are on, and Very often we hear the same stories in different contexts, that land acquisition is a problem, court rulings is a problem, government rules is a problem, be it telecom, be it power, be it other infra, poles and toll bridges, there are always issues and all. So we'll start with you. Give a first preliminary remarks, particularly coming of age. Has it already come of age, or there's a note of interrogation? And yes, let's have the first one, then we'll get into some of the micro issues. We're not getting into discuss into particular company, but the issues that are pertinent for the infrastructure. I'll not speak from now on, just only you people. Vineet, we started with you. Virender, sorry. Pritesh.
Good evening, and thank you to Trust for having me here for this session. I think that, maybe from the limited prism of, the experience or the worldview that we have had, and with a qualification that, you can't paint everything with the same brush, that may not be fair. So I'm sure there are varied experiences in the long track record of, disappointments on infrastructure built up. India has always been a very promising or a hope country, but the follow-through has actually been suboptimal. But I would say that as far as the limited point of infrastructure financing is concerned, in our view, I am yet to come across a project which suffered because of lack of financing. Now, it may be easier to, club financing with a number of other things. It could be bankability, it could be financial viability of the project, it could be execution-related issues, it could be policy paralysis, as well as, the lack of the famous, the lack of environmental clearances during the fag end of the UPA government. But financing, I think, I'm yet to come across that a financially viable project, which is bankable, where a number of risks are mitigated, is not finding adequate lenders, and therefore the project is not able to go through. I'm yet to come across that, So maybe my high-level view is this, that not as philosophical as the earlier session, but some of these issues, maybe I'll just take, one more minute from a very limited renewable energy space point of view. If I give some high-level data, the most bankable off-taker today is SECI, right? Central government sovereign undertaking. Very interestingly, so far, SECI has bid out tenders worth more than 40 gigawatt of wind and solar and hybrid projects. As we are speaking, only 10 gigawatt of those are commissioned and operational. So there's 30 gigawatt of SECI tendered project, which is under construction, under development. Some of them where a PSA is yet to be signed, some got stuck because of the GIB issue. So there are, I think that, a SECI like a counterpart, financing would not be the challenge there. There are other challenges, and therefore probably, the projects are not able to move ahead. I'll just stop there, and...
Thanks, Pritesh. Yeah. So your one-liner is this: financing is never a challenge. There are issues, and that could be issues also with the project managers, the corporations themselves. And also there are other things also. So one part actually, Robbie was saying that you are accepting that it depends on us, how do you execute. So from GSW, so shift to Babu of GMR. Preliminary remarks, few minutes take. What are the issues? Have we already come of age, or there a way to go?
Yeah, good evening to all.
Let's see.
I think we are the first people as a GMR group started executing the airport projects. We started from 2006 onwards, 2004 precisely. Initially, we did not face any problem when we started going for financing of the projects. Either a Hyderabad project or Delhi, we were able to raise the finances and we executed the projects. But infrastructure, it is a very long-term investments we have to do, especially airports where you keep on adding the capacities depending upon the growth. So especially when we raise the finances, we have raised the finances, we didn't have a problem, but when you have notice saying that over a period of time, the amortization structure was not working well with us because we have to keep on plowing back the funds for expansions. So of late, then after we realizing that we have moved into the bond market, especially international bond market. And that is the reason why we felt that Indian domestic market, especially capital market, bond market, was not depth enough to raise the finances initially. So we have started moving into the international market from 2015 onwards. And our both airports, either Delhi or Hyderabad, we moved into the total bond structure, which has enabled us to meet all our requirements. So otherwise, the finance was available. There was not a big challenge.
Babu, you said was not deep enough. So has it changed now? You're talking about 2015 and now it's 2022. We are nearing to an end. So has it changed? The bond market has got depth now by this over the period of last 7 years, or still the same scenario?
I think we are just seeing the change now. Very recently, first we have tested the market now in India from Delhi airport. So we were able to successfully execute about 1,000 crore rupees of the domestic paper. And now we will endeavor to develop more and more for both airports and going for our new airports in the domestic capital market.
And bankers are never averse to the idea of giving money?
Earlier, yes. In 2015, when we started, bankers were not inclined. For the bond market, they were not even able to understand, they do not want. But after we successfully completed international bonds, more than 8 bonds we did, about $2.5 billion, both airports together. Especially COVID has helped us to realize. And when we started, first orphan bond when we did, that is actually a new structure in 2021 March. The bankers have started realizing it. And the recent paper when we did 1,000 crore rupees, there was a good response from the banks as well as even including the NBFCs.
Okay, so let's hear Virender. Aseem, Infrastructure Finance Limited. Tell me your preliminary remarks.
I think I'll mention maybe 3 points.
Sure.
One is, yes, in infrastructure industry, whether it is financing or investing or developing or operating, all of us made a lot of mistakes in the early era. But I also am very convinced that all of us have learnt our lessons, be it lenders, be it investors, or be it developers. And I also believe that a lot has improved in India for the better when it comes to infrastructure. And if we are speaking of today, I think it's a pretty great time to be in infrastructure today. The platform is set, opportunities are immense, and today you have products and options at each stage of a project, whether it is a greenfield project, operational project, or a portfolio of a project. You can raise, floating rate money, you can raise fixed rate money. Once the project is operational, you can come to the bond market. Once you have a portfolio, you can come to InvIT. So you have all the products which are suitable at various stages available today. And overall in the industry, the risks have come down. And that is what is leading to, more and more capital flowing into India in infrastructure. So I think we are in for a very good time. I mean, you mentioned that corporate debt, bond market depth is not there. I'll just give you a simple data that Aseem today is very small. Our book size is 10,000 crore, but 30% of that is bonds.
Okay.
So it is not what it was, let's say, 5 years back or 10 years back. A lot of movement has happened in India.
So infrastructure financing in India coming of age, that tag is appropriate. It's ready to take off. Just one interesting thing you said, that we have learnt our lessons. The bankers are normally say that we have learnt our lessons and they have now better underwriting, better risk management. What is the lessons for you?
I think the biggest lesson is that infrastructure industry itself is meant for specialist players. It is not meant for everybody. Okay. Not every lender, not every investing class should put money into it. If you understand it, you are willing to have a long-term view, then come into it. Otherwise, let those who are specialists do, and you kind of follow them. Don't try to, if you get into it without knowing, you will end up in some problem or another.
Okay. Vineet, Aseem Infrastructure Finance Limited, tell us your preliminary remarks.
So I think, I believe in the last decade, India made several errors in designing their infrastructure policy, PPP contracts, and the risks were not rightly addressed. But in the last decade, we have learned a lot, and the next few decades are the decade of infrastructure sector. Government has very ambitious plan of $1.4 trillion investment, and in renewable alone, government is planning 500 gigawatt of projects. And to add on to that, they are adding a very ambitious plan on renewable fuels in the form of green hydrogen, green ammonia, green methanol, SAF, and that would add another 150 to 200 gigawatt. So what you are looking at, what took us almost 12 years to build 100 odd gigawatt of renewable projects which we have, and now every year we will be adding more than 40 to 50 gigawatt. So when I was fortunate to set up India's first solar power plant way back in 2010 and do the first largest PPA at 15 rupees in 2009. And those days, every banker was concerned whether utilities will pay 15 rupees or not, and whether the contract would be honored. And one of my project, Pankaj funded, my third or fourth project was funded by Pankaj when he was at L&T Infra. That was a 30 megawatt project at 10 rupees tariff. And those days when even we used to go and buy solar panels, people would ask that, is India really serious? And they would ask us to get EPC contractor from Germany or some other countries before they even sell a solar panel. And we faced all those challenges. And early this year, we commissioned 1250 megawatt project at 4,000 acre with 99 kilometer boundary wall. And to whether to raise equity for that or debt for that, we had oversubscription. Scale is different. You get paid on time. See, what promoters have to do is look for customer who are willing to pay. That should be the fundamental driver. The fundamental driver should not be scaling up the portfolio and go to everyone and anyone. Today there are states, unless we make 70-80% IRR, I won't touch from Barges pool. In our opportunities review committee, our head of business development won't even bother to bring those projects. So either your risk has to be priced well, or select your customers wisely. If you have selected your customers wisely, this is the best sector to be in, and we are lucky and fortunate we are in the right country at right time and in the right sector. The timing couldn't have been better.
So all of you agree that money is not a problem anymore.
So money was not even a problem in 2010 or 2011 or 2012 or 13. In 2013, I did world's second largest solar project, and few of my friends from industry said, people are looking at 5-10 megawatt, they are struggling, and you are doing 151 megawatt. And we had 3 times oversubscription. So if your projects are fairly de-risked, if you have selected your customers wisely, your contracts are right structure, risks are proportionally addressed, there are enough people are looking at long-term structured asset. So it's not that there is no market for such asset, there are customers. So you have to go to the willing financer, willing banker, but structure your project wisely. If you don't do that, you won't get money.
Thanks. Sir, the last speaker of the first round, and then we'll take a few questions from the audience, then we'll go back to certain micro issues. But general observations, what's happening, has it come of age? Is it correct that it's ready to, it has entered the takeoff stage? And as Virender said that, and Virender has I think probably in terms of years, maximum experience with the L&T and other places and all in infrastructure. So he said that we have learnt our lessons and this is the space to be in at this point of time. Do you also agree or?
So first of all, it's a pleasure being here in front of all of you people and share my thoughts. Sir, of course, I agree to all of our esteemed panel members that we have learned a fair bit of lessons from all the mistakes that have been made in the last decade or so. Obviously, infrastructure sector only took off in India in the early 2000s. And as in, in any other sector as well, when a new sector comes up, there are early mistakes that were made. So while those were made, right now the government has a very ambitious target of doing about a $1.5 trillion national infrastructure pipeline. So yes, there is a great time ahead. While I'm also very, very optimistic as the rest of the team here, though I do feel that there are certain challenges which have not been addressed. And what I mean by that is, so government has this $1.5 trillion plan that they want to spend on the infrastructure. While the government has that plan, I don't think so all the different agencies or all the different stakeholders which can make this successful are rightly aligned in that direction. And what I mean in that situation is, like certain sectors, for example, obviously green energy is seeing a lot of investment. When I talk about road sector, I don't think we've seen that kind of investment come into this sector, nor from the debt or the equity side, which we've seen in some of the other infrastructure verticals. And there may be other challenges around it. One of the biggest challenges that I feel in India right now, we don't have a deep bond market for infrastructure financing. That is the biggest challenge. Now, if you look at globally, infrastructure is funded by the bond market because the banking system does not run such a long gestation asset and liability sort of portfolio. So for the bond market in India, banks in India don't fund beyond a 15-year project, and the bond market in India is virtually non-existent for something like that. So if you look at the number of projects which are completed in India where a bank financing has been taken over by the bond market, it's negligible to the total number of projects that are available. So I think, and there are a bunch of reasons for that. There is regulation. For example, your large, deep capital, you have your insurance money, you have your pension funds. None of them are able to participate in these assets because of regulations around, the specific credit rating of some of these projects. Then there is limitation around how much promoter contribution has gone. Because a lot of these SPVs, the promoter contribution in terms of pure equity and the net worth is low. So they don't meet certain thresholds, which is not allowing these assets to go. And typically in the bond market right now, we have mutual funds, you have your pension and your insurance. All three of them have not really invested enough. So I think for the government's vision of $1.5 trillion of infrastructure to be built, we need a very strong capital pool, which is non-existent in the country right now for all sorts of assets. So I think if that is addressed, that will be a big portion that will be done. And along with that, obviously, a lot of regulations also need to improve. A lot of coordination between different ministries also need to improve, especially speaking from a developer's perspective. I think these are the challenges that I feel that while we are in a great place from before, but to get to where we are wanting to go, I think all these will need to be addressed.
Thanks. So of the 5 persons, at least one panelist says that no, resource is an issue. Resource is an issue, getting the right kind of resources. The rest of them are pretty sahamat in Hindi mein jisko bolta hai. Unanimity among 4 of them that resource is never an issue, was an issue but not now. You want to add something? No.
Yeah, I just want to add. Whatever he said is correct, especially the pension funds and insurance funds, they will go for specific ratings. And without that rating, they don't make an investment in the bonds. That is actually really a challenge. What I explained was that banks are now trying to participate in the bonds. But as of today, even now, insurance companies and pension funds are not coming forward unless you are a AA or above the rating. But that's still challenge for the infrastructure projects.
So
I'm just
thank you.
complimenting.
So first round, everybody was little sugarcoating, now slowly coming up. Yeah, want to add something?
Some maybe
Some caveats, huh? Tell us. Huh?
Just to add to what Babu said, see, it's for any infrastructure project from a risk and to the point that Vineet was making, the construction risk, where is the appetite for that lie? The bond market does not have appetite for construction risk. So therefore, for a greenfield project, that is not the solution at all. So all the greenfield projects, so therefore from a capital recycling, life cycle of any infrastructure asset, it will start with, project financing or, developmental financial institutions, etc., where the construction risk is there. And once the assets are mature, cash flows are stable, you do the takeout and release the capital through the bond market. So that is the hybrid model, but construction risk from the bond market was never there, and I really think that I'll be very surprised if during my lifetime I am able to see that appetite.
Sure. Acha, in your lifetime you would not see that. Anybody else want to add anything, or it's fine? We'll take...
As I said, I think it's wrong to expect that market provides you equity also in the form of debt. So I think there is a issue with the founders that they expect lenders to pay for their equity contribution. And as long as that mindset exists, lenders would find it difficult to fund the project. So if you want to be a multi-billion-dollar company, raise your equity appropriately, dilute your shareholding, and build that. So you can't have the structure where your debt service coverage ratios are not appropriate and all the risk is with the bank. Bank takes all the risk and promoter makes all the malai. That's not going to happen in India, and that's not going to happen anywhere in the world. So construction risk, if it's a construction risk, there are players who cover construction risk.
Thanks, Vineet. I think there's always good to have different opinion. In fact, this is what exactly former RBI Governor Raghuram Rajan had said, that he found that some of the promoters are actually not putting in equity on the table and looking for debt. They are looking for equity also from the banks in a different way. We'll get into some of the micro issues, but before that, any question anybody has? Yeah? No? All tired? Yeah, there are a couple of two, one's 3, 1, 2. Yeah, this gentleman. Because we may not get time to have questions at the end, so rather we get involved in the beginning. Guide us what all you want to know. Quickly.
Yeah. Hello. Yeah, myself is Satya Narayana. I am from sector which is called infrastructure, but wastewater treatment and garbage treatment you can call. Is there any funding for these kind of projects which are infrastructure projects, but they are not financially viable? So if you expect something return from that, there is no financing. Is there anything available for those kind of projects?
I don't know. Anybody wants to?
If you are saying it's upfront that it's not financially viable, so that means it's not a bankable project. So you can either get a grant from a philanthropic organization or go to a multilateral institute which may do it under ESG scheme or promoting better utilization of city waste. So those projects are not probably for profit, and it has a philanthropic angle, and you have to go to the right kind of institution to seek support for that. And there is a market for that.
Anybody else? Any question? No? Okay. There is a push for infrastructure. I'm just reading out one report in a business newspaper on 2nd November. It talks about, I'm just reading out simply, 1 minute probably. The center's think tank Niti Aayog, mandated with the task to monitor energy and infrastructure, has shortlisted 494 projects worth 5.66 trillion. 494 projects worth 5.66 trillion for completion by March 2023. These include 279 road and highway projects worth 1.92 trillion, petroleum projects worth 1.11 trillion, almost 1 trillion worth of railway projects, according to an internal report of Niti Aayog. Then it says the projects, you are talking about projects completion, projects have already incurred expenditure of 3.8 trillion. The expenditure anticipation for completion this fiscal year has been pegged at rupees 1.8 trillion. So there is a rush by the government to incomplete many such projects. And then what is the background? It says in July, Finance Minister Nirmala Sitharaman had asked the Niti Aayog to map all infrastructure projects lying loose and explore the possibility of bringing them under the Gati Shakti National Master Plan. The assessment of projects found that sectors such as the railways and coal had the slowest pace of execution in projects that had been earmarked for completion of this fiscal year. So government is on a war footing to complete many of the incomplete infrastructure projects. For multiple reasons they are incomplete. They will be all completed in the next few months, next 6 months, 5 months time by March. So that's the ecosystem now. There's a big push for everybody. Now one of the new thing is the green financing, and if we talk to bankers, all of them said that there are lots of proposal of green financing, and they have started green financing. I would not say in a big way, they are using their discretion, but there is money for that. So do you see that's the new thing in the infrastructure? We'll start from the right. Anything you want to say on that?
Refinancing of projects post its completion?
Green, yeah. I'm just talking about, yeah. Is that that's gaining momentum, and is this the right way, or you think there is over enthusiasm in that, both for the bankers' point of view, sanctioning such projects because they are quote unquote under pressure also to finance this kind of projects?
Yes, so I think certain banks who want to not take initial risk of construction, and those are mostly the private sector banks who are more averse to infrastructure sort of construction risk because they might have burned their fingers in the past. Some of them are open to taking over a project once it's completed. That is what we're seeing. Even within certain public sector banks, if they have appetite for a certain sector and if they find good asset, they will take it over for refinancing. But that's where I made that point about the debt capital market, that we do not have a deep debt capital market, bond market, which is taking over bank finance of an asset which is completed, an asset which is performing well, but yet we do not have that market existent in India. There's a very small percentage of assets in India that have actually seen a move from the banking system to the debt capital market, where those assets have gone and that kind of money has been available. So that's where I think for that to deepen, because we can't, once I can understand the initial risk, because like Sir rightly pointed out, construction risk nobody wants to take. The bond market doesn't want. We don't have a mechanism here where there is an authority which is looking at all these projects or approving and monitoring at them as well. Neither do we have your first loss default guarantee system in India. So because we don't have any of those systems in place, the bond market will not want to take a construction risk, which is where the banks are doing that. But once it's completed, we still don't see the bond market coming in and taking that. But yes, there is some refinancing that happens, and again, it's very asset specific. Typically, the refinancing that happens is for getting better terms, because during construction, banks will put in a lot of conditions which are not very favorable to any developer. But once the project is financially viable and done, developers seek to remove some of those guarantees, or even the cash trap which is there, how to get that, how to upstream some of the capital. So those are the things that you usually look for, along with a better interest rate.
Yeah.
So globally, there is a growing trend in the banks to focus on companies which have highest governance standard and which are investing into green. So if you look at even in Indian context, in March this year, we did the largest green bond issuance of 1,400 odd crore in India, and we got the rate of 6.75 from the bond market. So as I was mentioning earlier, good developed project with a strong rating and risk and reward mechanism can get funding anytime from right sources. And growing trend is, I just returned this morning from COPS 27, and almost every bank, whether it is JP Morgan, SMBC, DBS, Barclays, HSBC, all of them have targets to invest into companies who are either green or turning green or have a roadmap towards going towards the global ESG structured instrument. But there are a lot of greenwashing also happening to the extent it can be deemed as a fraud. So the world is not going to accept that you build a project where there is a methane leakage and you say that earlier I was emitting 3 million tons carbon and now I will emit 2.7 and to that extent I have become green. So all of those greenwashing I don't think is going to be acceptable anymore. The world was going through evolution phase. They have learned from making those mistakes. So genuine green project, there is a huge appetite. And countries like India, which have a strong focus on, so if you look at the G20 slogan also, it is one world, one planet, one family and one future. So if you go through that concept, I think we will attract a lot of green financing.
Virender?
So I think it is very important that bond market, which is warming up to infrastructure now, last few years, it's everybody who is involved with it, like, investors, lenders, developers, to make sure that there are no early accidents.
We're talking about green bond also,
no,
right?
I'm talking about deepening the market. So it's a responsibility that we don't have any accidents in this nascent stage, because ultimately it's insurance money, pension money, right? So the protection of the capital is very important. Perhaps what we as a country are missing is a very specialized institution which can give credit enhancement and take that first loss risk based on their understanding of the particular risk and the structure, and insulate the insurance money and pension money so that they are protected even though their returns are lesser. That over maybe next 10 years will give the confidence that, we will have enough depth to see that there will be demand for papers which are lower rated. I mean, today that situation doesn't appear. I think it's good. What is missing is in between those triple B to double A, that transition is where there needs to be a credit enhancement. And I think last budget there was a mention on it. We are yet to see emergence of that institution yet.
Babu?
Yeah, going back to the green bonds. So as an airport's first time we have attempted.
Yes.
Very recently in 2021 March, first Delhi airport. We have explored and we have presented to the international investors, and we have a second party opinion we have taken. And finally we got light green. So we have successfully executed $450 million of the light green bond. But especially in case of the ESG, what people look at is sustainable bonds. They give certain targets and which we have to define ourselves and achieve them. Then you will have a much better lower rate of interest. In case you are missing the targets, then there is a step-up coupon in the interest, and failure, then there is a recall of the loans. So green bonds now, as airport, our experience is that we have got a green, light green, and will be able to continue to get that going forward. We will try to get as much as possible out of this.
Pritesh?
Yeah, so on the green bond, I think that the international green bond market is pretty developed, and I think so far in India since 2015, when the first green bond was issued, about $22 billion of ESG-linked bonds have already been issued. And why that is a kind of a success, just taking a leaf from what Babu shared. In May 21, from JSW side, we launched a green dollar bond offering for our hydro business. And it was a $700 million offering, and it was, when the final book was priced, it was 4.5 times subscribed with a tightening of 50 basis points from the IPG. So the demand is there. But why is it so? The question is this: because there are mandated pools of capital where there are deployment pressures on this. And because of there is more demand than supply, from the issuer's point of view, you expect a sweetening of the pricing. You expect at least a 25 basis point tightening on a green bond versus a non-green bond, right? It works both ways. So coming back to the Indian context, while we've started taking baby steps, with what Vineet said, what Babu said, until and unless from a regulatory or a prudential norm, etc. point of view, a mandate is brought in, because you have to look at it from the investor's point of view. The bunch of people sitting in this room, as long as their performance is going to be assessed vis-a-vis the NAV at the end of the month or the quarter, or, performance vis-a-vis a benchmark relative to the benchmark, nobody is going to sacrifice on yields just because it is green, So there has to be a big push from the regulator side to mandate that a certain, maybe start with a 5%, 10% of your book has to be mandatorily green. Only then, after a few years, we will be in a position where, we can say that, yes, there's a credible green bond market. But I think it is non-existent today.
RBI has been talking about it, but yes, there is no mandate as such. Tell me, before I go to the last round, this is a question for, I think I can ask Babu, because you represent GMR, there's nobody from Adani here. This 2025, will it be the year of the airports? I mean, if anybody else wants to add to him, that's fine, but that's the general perception. There are too many everywhere. What is happening?
No, you're talking about the 25 airports, which government is talking about it?
Yeah.
Yes, it is a good development, because now India is today the third largest domestic market, aviation. It is likely to become the third largest aviation market in the world by 2026 expected. And 2019, which was the best year, 1920, India had more than 340 million passengers movements. So if you want to increase the penetration, and because of increased middle income group, and because of the COVID now, people are trying to move towards the air travel. And it is a time now government also should think about, which they are already talking about, the privatization of 25 airports, which they are talking about clubbing the major airport with weak airports. It's a combination which they are planning. It's a good step from GMR point of view. Certainly we are interested to participate, wherever it makes sense for us.
Talking about liquidity, talking about money, you spoke about the shallowness of bond market and all. So tell us, is there domestic pool enough? We have heard people in other panels, there is enough money, money is for the asking, there's money locked in gold, money locked in land, etc., etc. But there are equally people believe that no, it's not enough to support infrastructure, we need to look overseas. So what is the truth there? Both of you, first him, yeah.
So the money capital that is available for infrastructure is definitely not as much as we need. There is a serious dearth of capital for the sector. And like Vineet bhai said, obviously if you are a good company, you're doing well, you will have access to capital. But I'm talking about the sector in general. I don't think so we have enough as much as we need. And of course, the capital is not there because investors in the past have burned their fingers. And they've burned their fingers whether because of developers going rogue, or the government doing policy flip-flops, or not honoring the contracts, or the courts taking forever to come to a decision. So I think all these things collectively have caused a certain amount of disdain from investors to invest in this sector. And typically anyways, this had not come. So we do rely, so when we don't have domestic capital, we do need foreign capital to come in to support this growth, and whether it's on the equity or the debt side. And for that, what we as an industry need to assure them of, there will be no policy flip-flop. We can assure systems and processes which will assure that developers are not just thinking about themselves, but are also putting systems and processes in place which will enable them to sort of show good corporate governance structure. So all those things are needed. So we definitely need a lot of capital, both domestic and foreign, for the growth that we need to have.
Yeah, Vineet, you want to add anything?
So I
Is
think
domestic pool enough to support the infrastructure growth?
so. With India's aspiration being high, and we want to be a 10 trillion economy, we need to tap into all sources of capital. So any willing capital is welcome to India. And today actually the challenge, I am again repeating, is not for the capital. For companies which have high ESG standard, companies where governance is very high, and promoter can clearly articulate the difference between promoter's money and company's money. So if your basic concept is right, the capital is not a constraint. When I started this business in 2009 and 10, we used to go to raise $100 million. We had to tap into 3 private equity funds. And during COVID in 2021, we were looking to raise $250 million. We hired a banker to raise $250 million. And he said, Vineet, if you are looking at $250 million, I have 2 people who are willing to invest. But if you raise the quantum to $500 million, I have 5 people who are willing to bid for investing into your company. And we actually increased the quantum. And for a $500 million round, we had a $2.5 billion bid. And literally it was an auction on who will get to buy the share. So you have to raise equity. The power of equity is stronger. All the challenges you can overcome if you have raised more money than you need. As Rohan was rightly saying, many times there is policy lacuna which when the country is evolving so much and the real power resides in the state, whereas center is making all the vision, then always there is going to be a disconnect and there will be a challenge. So if you have raised capital wisely, you can hold on to those challenges and address it properly. But all of this depends on promoter, your processes, the kind of practices you are following, and kind of contracts you are engaging into.
So if you have the right project, the money is not an issue. That's what you're talking about.
I've seen it happening in the last 13 years that money was never a constraint.
Okay. Yeah, sure. So we have very little time, maybe 1 minute or 1.5 minutes each, from starting from you and ending with you. Is this, we have experimented with a lot of institutions. There was talk about a year back, let the development financial institutions come back to support infrastructure. Then we have found that there's a new animal created. Animal is not in the wrong sense, in the right sense I am saying, which is the National Infrastructure Bank. And this chairman is, the boss is Raj Kiran Rai, the former Union Bank chairman, IBA chairman. He has now got, I think he's operating from Sidby office in BKC, not yet got his office, in the process of appointing people, making policy, so on and so forth. So is it the right kind of answer? Will it be a panacea for infrastructure financing, an appraisal of right kind of projects, this NAFED, I think it's called, or whatever, National Infrastructure Bank? Is it the right thing? And if it's not, or even if it is, anything else need to be done for infrastructure? Quickly, 1 minute each from each of you.
I think obviously it's a right step in the right direction because, like I mentioned earlier as well, typical banks are not so keen on funding infrastructure because of the asset liability mismatch and the long-term nature of assets. So you need a very specific infrastructure focused agency which is doing that. And while we have had other financial institutions as well which were financing infrastructure, you had a PFC or you had different agencies doing that. I think for the larger vision that we have, we needed something like this, and it's great. It's a step in the right direction. But along with this, I think the government, along with RBI or IRDA, or the pension fund sort of regulatory agencies, all of them will also have to come together, which allows them to also conducively invest in these assets. Why should a Canadian pension fund come to in India and invest in these capital, in these assets, when our own Indian pension funds and insurance companies are not able to invest. So for me, the biggest shock is that, that we do not have like a foreigner who's taking all the risk of the country risk of an infrastructure asset risk is still coming and doing that. So I'm hoping for that to sort of also open up. And even SEBI, like the NAV issue that Sir raised for all mutual funds, they are unable to invest in these assets because they have to now, under SEBI regulations, give for the NAV, and it does not happen for these assets. So it's an asset class which is dead for them.
Vineet, 1 minute.
India needs 10 NAFEDs, and the quick solution is convert IRIDA, PFC, REC, IFCL. DFI is one of the best act in the last decade. Make all these 5 institutions immediately to DFI. Don't have this restriction on old institution versus new institution. That's not helping the sector. And we need almost a quarterly launch of new infrastructure institution to fund the growth aspiration of India and build a new India every decade.
Virender, what are the things need to be
equation
done?
for India is very simple. Without infrastructure, we can never become a developed country. Now
But
to
sir,
do
this is not
infrastructure,
a लाल किला 15th August. आप जो ground reality बताइए, मतलब वो ये चाहिए, वो चाहिए. Okay, so what are that? Quickly, 2-3 things we need.
that's what
to do.
I'm coming to that. So we need infrastructure for sure. And if there is one thing that we need to do collectively is to reduce the risks in the sector.
How do we do it, sir?
If we simple by ensuring predictability of the cash flows. So Robbie talked about assumptions being properly validated, understood, and financed, and you stick to those assumptions. The capital from all over the world has no place to go. It will flood if we are able to be consistent and predictable, whether it is policy, judiciary, regulation, our assumptions. We need to be consistent for next 10, 20, 30, 40 years. Capital is never going to be a constraint for this sector.
Babu?
I think I am in favor of DFI, Development Finance Institution, like NAPFID, which government is talking.
Any radical idea?
Sorry?
I said any radical idea, out of box idea of how to take it forward?
Taking it forward is basically the government, especially the ratings, is the area where these infrastructure projects will find it difficult in the beginning itself getting a higher ratings. So at that point of time, there should be some relaxation. As Virender said, that when you look at it, there is a cash flows available, because infrastructure projects with cash flows are over a period of time. You will not get immediately. So if considering that, if there is a facility, there is a great enhancement as well as some exception to the infrastructure projects will be helpful, so that you will be able to get better financing.
No, some credit enhancement fund you are talking about, or what you are talking about?
Credit enhancement is right now is available, but it is not fully, because there are so many restrictions. We may talk about it, but it is not useful. It's very clear.
Okay. You started, Pritesh, so you close it.
Yeah. So maybe
Is National Infrastructure Bank is the answer to all the problems, or we need to do more? What are the things?
I will continue to reiterate what I said earlier. Capital is going to be the last of the problem. Now, whether it is domestic or global won't matter. But I think the real serious challenge are twofold. One is the incentive system, which is partially distorted at this point of time from the developers and project owners' point of view, especially in a very limited sphere of, say, renewable energy. We've seen a very aggressive bidding, irrational bidding by developers. So there is roughly 30 gigawatt of projects which are never going to see light of the day, and not because of financing, because they are financially not viable. Nobody had put a gun to the heads of those people to bid at 2 rupee 30 paisa and 2 rupee 25 paisa tariffs, right? So that is number one. Because the incentive system there is distorted, because they are getting paid by, flipping over their portfolio at a X times book and making their carries. So this is a problem with financially sponsor-backed platforms. So one is that the incentive system has to be kind of, right sized in terms of the evaluation criteria, bidding methodology, etc., so that you are serious at only viable projects, get bid out. That is one. Second is this, and this is a food for thought for the broader audience here. As India transitions to the new energy economy, gone will be the days of 25-year offtake contracts with predictable cash flows. When you transition into things like green hydrogen and green ammonia, how do the credit and the risk teams of the lenders appraise those projects where there is no predictability of cash flows? How do those contracts come about? How will those projects get funded ever? Until and unless, the sovereign steps in or multilateral funds step in or some specific green pools of global capital step in. So we need to start thinking about those also, that as we transition into the next phase of greener infrastructure across storage, across mobility, across hydrogen and ammonia and its derivatives, I don't think our system is today mature enough, and not to blame the system, globally we are not mature enough to fund those kind of projects. So let me start.
Thanks, Pritesh. So it brings us to the end. Thank you, all of you. What would I say? It was actually packaged. First, this one-on-one conversation with Robbie, and then this panel on infrastructure. So I think everyone agrees that they agree with the premise that infrastructure financing coming of age. Actually, it has come of age. It's sort of inflection point. We can take a great leap forward from here. But there are challenges. There are multiple challenges that you said. You pointed out an interesting thing that you can't expect equity to be given by banks. You have to have your own equity, and debt is always there. That's not a problem. There is a problem. There are issues with the ecosystem. There are challenges. But at the end of the day, the project has to be viable, so the buck stops at you. And if you have a viable project, everything else falls in place, and we are ready to take off. I think with that, this is over for my side. Thank you for bearing with me for last 4 sessions. This is the 4th one, I guess. And thank you. If you like it, you give them a big hand. It's the end of the day, and we have exceeded time, but we tried to make it because we started also late. So that's it. Thank you. Thank you. Bye.
Thank you for being an amazing host.
Thank you so much, gentlemen.
This gentleman, Utpal, sitting there.
Utpal as well as you. Thank you, Utpal.
Thank you. Thank you so much, gentlemen. Ladies and gentlemen, let's give our panelists a huge round of applause. And I request Sani to please step forward as we felicitate our panelists. But before that, we will unveil the compendium on infrastructure financing in India. That we officially unveil, ladies and gentlemen. Want you to know that you will receive the hard copies of the compendium at the registration desk, or you could scan the code and get the soft copy of the ebook. That we will hand over the memento. We will start with Mr. Virender Pankaj. Mr. Virender Pankaj. Next we will have Mr. Vineet Mittal. Mr. Vineet Mittal. Mr. Rohan Suryavanshi. Mr. Rohan Suryavanshi. Mr. Pritesh Vinay. Mr. GRK Babu. Ladies and gentlemen, once again, let's give our panelists a huge round of applause for the profound knowledge they have all shared. Come on, we can do better with our claps. Thank you. And now, ladies and gentlemen, the most awaited panel, Indian debt and equity markets aligning India's future together.